We've got that rand trading around 677 against the dollar. In the meantime, though, we've had the euro strengthening to 146. So the rand holding pretty steady around yesterday's levels, not seeing that much strength coming through.
No, but yesterday's data, the rand continued to strengthen on the back of the fact that there were increased rate expectations coming out after this March's CPI data surprised on the upside. Rand bulls were also further encouraged by the fact that there was still positive global sentiment and also on the back of firmer commodity prices. Today's market activity is expected to be really very light, so we expect the rand to trade very lightly into the weekend as there's not much as far as data in the offering for today.
Well, how do you balance out that CPI reading? That's March's CPI at 4.1%, slightly ahead of expectations, with the retail sales numbers we had, because that came in below expectations and showing that the economy isn't steaming ahead quite as we thought it might be.
Indeed, we saw the number come in softer than expectations. I think expectations was for an increase of about 7.1% in February. We also saw the January numbers revised slightly lower to about 6.3%, and it really underlines the fragility of the economic recovery. We initially thought that retail sales would increase at a more robust pace as we progress through to the remainder of this year. But confidence seems to be tempered slightly, and we expect retail sales to only trade very lightly going through towards the remainder of this year. We also saw the Reserve Bank indicating that the South African consumers' credit profile is a bit shaky at the moment and that they are not really rushing into taking out more credit. So that's really going to impact on consumer spending and retail sales going forward.
So how do you balance all this out when the Reserve Bank has to make its next interest rate decision, or an interest rate decision going forward? Because as you mentioned, we had that financial stability report out yesterday, and the Reserve Bank warning that high interest rates could hurt companies and consumers who aren't fully recovered yet. So does that lower the expectation of an interest rate hike this year?
It could lower the expectations, but markets are still pricing in an interest rate increase this year. Standard Bank still views the inflation profile as fairly contained. We do see that inflation will remain within the 3 to 6% target for the remainder of this year. And given the fact that retail sales came in lower than expected, I think it will really keep interest rates on hold at about 5.5% for this year. We're only seeing a further rate increase in about the first quarter of next year.
So do you think South Africa then may be in a better position than countries like Brazil, where I saw interest rates were raised by 25 basis points this morning to 12%? It's inflation right at the top end of that 2.5 to 6.5% target.
Yes, I do think we're in a better position. We also have to remember that March is one of the highest survey months, so we were expected to see upside pressures come in from additional surveys. Brazil's situation is slightly different. They obviously have one of the highest inflation rates in one of the biggest emerging economies. So our situation is slightly different. We do expect inflation to be contained, but there obviously are inflationary pressures coming through from food and fuel. So we are cognizant of that, but we do see a breach only towards the third quarter of next year.
New Director General at the National Treasury, that's Lungise Fuzile, and he's replacing Lesetja Kganyago, who's moving across to become a Deputy Governor at the Reserve Bank. Any expected market reaction to that? This is a man who's worked at the Reserve Bank, at the Treasury for a number of years already.
I think they would have welcomed that move. The current DG has been with the National Treasury since 1998 and has been head of the asset and liability management. So it really is a welcome move.